Hi, I'm Bert Nussbaumer from macrobeat.co.uk. Like we said last time, we are really entering a period now that is probably more going to be emotion driven rather than the true macro fundamentals that may matter. Today, obviously, first up, we have Boris Johnson that is expected to speak at some point, maybe, hopefully today, maybe over the weekend, once the EU summit has finished, and give his verdict whether the UK is actually walking away from the trade talks or if the Brexit negotiations are going to continue. Obviously, if the UK would walk away from the talks, that will have severe impact on the market, and we come to that in the slides. The other thing, obviously, US election just 18 days away, another sort of big one with unknown tail risk. So again, macro may just not matter right now in the very short term. And last but not least, obviously the second wave of COVID in Europe, which are going to be showing you a slide as well. So right now it's really more about emotional trading, I think, in the next few weeks rather than, true macro fundamentals. But the first slide I have for you is really just this Europe versus US comparison on total number of confirmed COVID cases. As you can see, the way the red line now accelerated to the top and actually breaking the US numbers, it's quite easy to understand why the market suddenly has seen a bit of a sell-off in the last few days in European equities versus US equities. And this is really the reason why, given when you look at that curve. The same obviously sort of happens on the currency market as well. On the second slide, this is sterling. That one I just want to show, given, as I said, the potential impact from any sort of UK leaving the trade talks and leaving with a no-deal Brexit. I just took the liberty to put a few arrows in there on potential reaction that this could have in the market. And obviously this will be, or would be, a very severe, very fast move. So on any sort of leaving the talks, preparing for no-deal Brexit, I would see cable at least on a 124 handle, potentially lower. That has yet to be seen, but definitely severe pressure, and sterling will not be the only one. On the next slide, we have the euro. Here I just sort of thought like I show you a monthly chart, which is really a chart of the last sort of 12 years. And we just see that since we broke on the top side in July, we did print 120, but we just don't really extend anymore. And this probably has to do with the market really realizing the ECB has probably to start to be more aggressive on the easing side. And if you look at compare CPIs between the US and Europe, I would say it's funny that the Fed tries to be ultra dovish and the ECB has a wait and see. Well, actually, it should be the opposite, the other way around in reality. So obviously in the euro, very big Brexit risk as well. So if we were to get a no-deal Brexit, so the move I just showed you, or the potential move in cable, is obviously going to be replicated in some way in euro, just to a lesser extent. But I wouldn't be surprised to go back to the 114, 112 area should we get a no-deal Brexit. And that obviously would entail as well big move lower in euro, Swiss, euro, and anything really euro denominated. And last but not least, we would see a big drop in the DAX, in the FTSE. So this is not just going to be a domestic sterling or UK incident. It's going to be Europe at first, and it could even drag into US equities and become more of a global worry. The next slide is the dollar index. Interestingly, yesterday we closed the first time above the downtrend line from the 2020 highs. It's only been by a whisker, but we got to watch this 93, 70, 80 area. If we start to gain from there, we could really be at the early stage of a full dollar reversal, the dollar going to break higher again. Last but not least, dollar CNH, 667.5, the low last week. That is when the PBOC finally had enough, stepped in, cut the FX reserve requirements by 20% back to zero, which cheapens it up to be a short CNH, and we had a strong 900-point rally in dollar CNH. So I think that one is done for the downside right now as well, which helps the dollar on the upside. That's it from me. Thank you very much indeed. Bye-bye.